Well, hello and welcome to a fourth quarter update for 2020 and a look into 2021. And first off, I have to ask if anybody also received their free trial of 2021 and replied back that they were no longer interested. Because that seemed to be kind of how 2021 started off. It was almost like 2020 was just continuing right on, right? So we're going to go through a few things here, kind of what we see happening or happened, right? What we see that happened in 2020, most like in specifically that fourth quarter, and then kind of, I hate to say this, what we kind of expect to maybe see in 2021. If we go back to my quarterly update in the first quarter of 2020, we could probably just throw that completely out the window. So we'll just do what we can here as well. So a lot of us can probably say, thank goodness that 2021 is behind us. The recession that we had so far has been the shortest on record, if you can believe that. It was wiped away with a huge rebound in third quarter GDP, even though we still have yet to fully reopen. And because the coronavirus still with us, still going strong. We had a pretty rocky October. We had a great November for the S&P 500, the Russell, all the main indexes had some pretty good Novembers. December saw the market continue to trend up even from November as the holiday season kind of gained steam. The big news in the quarter included the promising development of multiple vaccines for the treatment of the coronavirus and the election of Joe Biden as president. So the vaccines provide a path to a return of hopefully mostly normal social and business activities, while the election of Biden could potentially usher in a period of calmness, maybe even a period of gridlock. Headlines about the coronavirus still kind of grim. We've had spikes in cases that's generated new restrictions, but at least this time the restrictions are, they've been more targeted instead of countrywide shutdowns. And the restrictions have kept our economy from fully reopening. And that's been pretty difficult for a lot of the industries that require foot traffic and in-person shopping. So Congress did finally quit messing around and did reach a stimulus bill, an additional $900 billion in additional stimulus. And that package also extends unemployment benefits, which are pretty critical for a lot of people that have been out of work since March. And also, speaking of unemployment, the numbers still remain high and even increased in December due to some of those new restrictions that I mentioned. And we're talking about, 800,000. Well, I mean, at least it's not back up into the millions like it was around March, April, May, and around there. But still, I mean, if you think about what normal unemployment claims are per week, they're in like the couple hundred thousands. And so this is still big, having 800,000 per week that are claiming Social Security. One piece of good news from the fourth quarter is the pandemic did not keep us from our holiday shopping. Most of us went online with the shopping. So that was great news for the big box and internet retailers. It was horrible news for the brick and mortar shops. However, a lot of vaccines have been developed, multiple vaccines really, and approved in record time. I mean, think about when they really started this around March of 2020, and it's not even March of 2021 now. So that's been critical in getting us back to normal. As doses are getting to the people who want and need them, we should start to see some restrictions ease and our economy reopen more fully. And as that happens, unemployment numbers should go down and markets will respond with that as well. And how many of us are ready to get back to travel? My hand is up on that one. We want to get back to traveling. We don't want to have to take all these COVID tests in order to travel. We just want to be able to go, right? So that's it. Data has actually been good over the past few months. I mean, as far as market wise, right now, don't think the markets are overvalued still, though it is good to remain cautious about stocks. Still have a long ways to go before the pandemic is completely over. So it's really still difficult to say what direction stocks will take. It's also a good idea for investors to remain cautious of bonds. I mean, since yields are rising now as investors are shedding some of the fixed income and focus on the equity market, best piece of advice for investors right now is to just be patient, stay the course that you've got going on with your advisor. And as we start 2021, pretty optimistic. I can't stress enough the importance of having an allocation strategy and a plan based on your risk tolerance goals. And I know if you're a client of mine, we've already talked about plans and we've got certain things in place to where even if the markets don't cooperate, we're still okay. And once again, if there's any of your friends or family members that you guys have been thinking about that may not have that same confidence, please show them, or I guess point them in our direction. Go to our website that I mentioned on there with the ambassador program link there, and enter their information. So think of these goals. Really, you need to be focused on your goals and not the daily and weekly returns. I mean, if you see daily fluctuations in the market, weekly fluctuations in the market, those things are going to come and go, right? So think of this journey as a hike, not a sprint. You know where you want to be at the end, but there's going to be dips, curves, inclines, and other things that, are going to pop up on the trail. So the important thing is the destination. If you look at the horizon, that's also why they tell you to look, out far when you're driving. You don't want to look right above your, the front of your car. You want to look out at the horizon. They also tell you that when you're parachuting. I've actually never done that before, but I know several people that are. That way you can gauge how close you are to the ground better than if you were just looking straight down. Well, you need to look straight down to check your footing every now and again, especially on rough terrain. But the end goal is what's most important, right? So things have improved greatly since last spring. So don't get complacent. There still is an opportunity to reassess anybody's tolerance for risk, reallocate maybe in a way that's designed to cause you less risk if we haven't already done so when it happened the first time. And so, in my opinion, the first part of 21 will be pretty strong as the vaccine helps tame the virus. Businesses fully reopen, maybe pent-up demand is released, so that could be it. And so, I think if you remember back to 2020, like when it first started, right? The first part of 2020, it was like we had a trade deal with China that was being finalized. The impeachment of Trump was in full swing. We had some turmoil in Hong Kong, and the Iranians weren't behaving. That was pretty much it. On the upside, we had a pretty strong economy at that point. Markets were doing well. Recession was nowhere in sight. Big surprise. Now that, hindsight 2020, right? And so we had a very strong economy, right? Unemployment was historically lows. And then February, we got news of the virus making its way into the US. And, I don't really need to go too much into the rest of that because we all lived it, right? And so the U.S. Equity markets will continue to climb probably in the first quarter as more and more of the economy opens up, thanks to a more widely available access to the vaccines. If the vaccine rollout goes smoothly and people get the vaccinations, we should have a pretty solid start to the year, especially in the second half of the first quarter and on into the spring. Earnings will continue to be pretty good since we'll be coming off levels that have been depressed by the virus-induced restrictions. And as more businesses fully reopen, more workers are going to rejoin the workforce. Consumption should pick up and companies will increase profits again. And so with all that, I do not see stocks getting overvalued, at least in the early part of the year. And this will not be a U.S., phenomenal year for the U.S. either. International equity should perk up a bit as the world comes back online. The recovery should also benefit mid-sized and smaller companies as well. So the recovery will be on a much broader scale than what we saw in the second half of the year, that were mainly just large tech companies and large corporations, right? Unemployment at the end of the year, just under 7%. So that was better than what it has been, for the rest of 2020, and it should continue to decline as people return to work. I don't see us getting back to the pre-coronavirus levels yet in 2021. That was about like 3.5% that we saw back in February. But small business, which does employ close to 60% of the nation's workforce, has suffered disproportionately to the big corporations and the tech companies. And then those that manage to survive will be very cautious about expanding or adding employees to pre-coronavirus levels. So they want to make sure that the coast is clear. So I can see unemployment dropping from current levels to maybe 5% by the end of the year, 2021, right? But I mean, it'll be slow. It's not going to happen fast. Stimulus money could also give us a jump start on the new year, as long as it gets to the people and the businesses that need it. And it will take some time. So talking about the Biden administration, it's going to take some time for the changes that the Biden administration hopes to implement. And in the first part of the year, it's going to be difficult to separate a new administration and its policies from the outgoing one, because it'll take some time for the new policies even to take hold. And like it or not, politics will go hand in hand with economics until President-elect Biden has an opportunity to start driving his own direction. Maybe it'll be all election posturing and pro-growth policies we've seen, we've been seeing before. Being hit by the virus will be resumed, but we probably don't know which direction we take until at least the middle of the year. So in the meantime, the news should be good. So people will venture out, kids will return to school, restaurants and bars that survived the shutdown will be able to reopen fully. People will hopefully start traveling, albeit a little bit more cautiously, maybe. And so in the first half of the year, we're expecting GDP to approach 5% annualized, slacking in the second half. And so we'll probably see growth around 3.5%, I would say 3.5% in 2021. And so it's actually a pretty good number. We'll just barely get back to the level where we were when we ended 2019, and 2021 could be a good year. But will it be sustained? Yeah, I still believe the U.S. is the best place to be. Our economy is stronger than pretty much the rest of the world still. U.S. equities still continue to be attractive. I don't believe they're overpriced. I would also take a little look at maybe international equities too, as I think there could be some opportunity there than now than there could have been in the recent past, as they're able to open up and continue to improve as well. And so first half of 2021, once again, shining the bald head crystal ball thing, right? We could see stocks climbing up, 5 to 10% from where we ended the year. And as we head into the summer, we can push close to the 4,000 range from the 3,700 where it ended in 2020. I expect yields to rise a little bit more as more money starts leaving the sidelines, and the 10-year treasury yield should climb maybe to about 1.5 by June from its current level of 1. Our debt's pretty high, but relative to what and compared to who, right? We have more debt, but it's still manageable. The European Union is a fiscal mess. Japan's not as strong as we are economically, so pressure on the dollar will be minimal, and we'll see an increase in our consumption of inputs. So especially if Chinese tariffs are lifted. So as far as inflation, I really don't see any pressure in the near term, as both producers and consumers are going to be, cautious as we come out of the aftermath of the virus. Energy costs are going to remain low, and it'll take time for activities that involve travel to return. Airlines are likely going to have a slow go of it. Economic activity will slowly gain momentum and not put pressure on the price of energy. So I see price pressure on energy coming from environmental policy changes before I see it coming from consumption. And so we'll be back every single quarter to go more into, basically, were the predictions anywhere close like they were not in 2020, and just find out if 2021 can be less of a dumpster fire of a year than 2020. And so this is to hopefully being able to get back in touch and have more client events with everyone, because things will be opened up and people won't be as afraid of contracting it. And maybe people that get the vaccines also will feel more comfortable, and we'll just be able to move ahead with some semblance of normalcy, right? So once again, thank you for a very interesting 2020. For all of those that are with us, staying the course, understanding that we still have plans in place for when market environments go a little nuts like they have gone here. And ultimately, the goal is your goal. The goal is not necessarily, did the index do this or did my portfolio do what the index did, because we're not trying to benchmark the index. We benchmark your goals. If your goals are all still on track to where they need to be, once again, keeping your eye out on the horizon, not the up and downs that might be happen daily, weekly, or even monthly, really. But keep them focused on that goal, on your goal, not someone else's goal. So that's it. Once again, thank you for being our clients. We enjoy each and every one of you, and we're going to continue to monitor everything just to make sure that we're continually able to put you in better positions for your retirement than before you started working with us. That's always my prayer and our hope, and what we can go for, what we try to accomplish. That's it. So hopefully we're able to help empower you guys to live the retirements you deserve. Now let's get out there and travel more, and then have some more fun for 2021. Take care.